Hey YouTube, this is Zach with Achilles Financial, and today I wanted to talk about some of the key catalysts that I continue to see in the oil industry. Admittedly, this is something that is going to continue to be shown across a variety of price points as we continue to see oil prices continue to climb. We just saw an incredible quarter from XOM showcasing that not only are they having excess cash again, but they are putting that cash to work to improve the price of their shares by buying back that stock. So there's a lot of advantages to looking at oil right now, notably the fact that we are seeing a large lack of supply or the intent to produce more supply. What I have up on my screen right now is the GUSH ETF, which is a bullish 2x shares. And I want to highlight that on TD Ameritrade, they even say that this is not a suitable investment for most long-term investors. The reason for that is because this is a bullish ETF fund, which means it has additional exposure. I like to play these often on the option side, keep the position small, but look at the potential for additional leverage. Right now, WTI crude oil, which is essentially the price per barrel of oil that most of the country, or rather the world, utilizes, is currently around $67 a share. I stand by the statement that I made earlier this year that I believe by the end of this summer, think August, that we will see WTI over $100 a barrel. And the reason for that is we are actually seeing a lot of return to online, or rather air travel, as well as in-person travel. And right now we haven't seen the additional increase associated with that in terms of the supply side. So we have a lot of additional demand, not nearly the same amount of supply. You can see that that is when we saw earlier about 2 weeks ago that the bullish fund for GUSH ETF actually started going back up. I think that what we'll continue to see is the fact that we are going to have those oil prices continue to rise. Along that same line, we actually had the Colonial Pipeline, over which experienced an attack over this weekend, which is going to cause further supply developments that are not going to be good for the overall price. What that's going to have happen is going to send gas prices higher, oil prices higher. So some of the ways that we can play it is, one, again, bullish or call options on GUSH. This is not necessarily a stock that is going to double in value, so be careful. It is not a stock, it is an ETF, and you need to be careful if you are planning on saying, hey, this is going to go to 130, 160. The other thing that I would caution against, if we look at the chart, is this has not always been a 2-year, or rather a 2x funds. So if you look at this and say, hey, this has the potential to go back to 15,000, keep in mind that during this point in time, as of 3 years ago, that this was not a 3x fund, but rather at this point in time, it was like a 15 or even 25x. So just be aware of that when you see some of these prices. What we want to really focus on is, again, the fact that this could go back to 100, and I think that there's a lot of potential for it to do so. I think it's going to open up another big green day over the weekend. However, if you're looking to play oil, then the safer option, and one that I've been encouraging since last year when they bottomed out in the, if we look at the 1 year time period, back during this point in time, well, before the November time period, I still like XOM because they do have a dividend, as well as the fact that they do continue to buy back their shares because they just had a massive quarter. So all that being said, I am a fan of the oil industry right now in terms of the potential profit. This is something that I would look at going forward because there's a lot of near-term catalysts, but I do think that over the course of the summer, I just don't foresee a additional supply, with the fact that most of the oil that is being used in the United States right now is imported due to a number of legislative actions by the current administration, as well as the cancellation of the Keystone Pipeline. Now, regardless of the political opinion on either of those two matters, at the end of the day, the important thing to note is that we are going to see the price of oil increase, and the price of gasoline at the pumps in the United States are going to increase as well, which will translate to additional cost for a number of United States-based companies. What we're looking at here is how it's going to impact the balance sheets and income statements for a number of the oil producers here in the United States. For that reason, if you're looking buy and hold long term, I like XOM, but I'm by no means a a financial advisor, so make sure you do your own due diligence. And if you're looking short-term, more bullish approach, then I will be looking at GUSH, which we just had on the screen. So if you want to continue to talk about it, feel free to check out the Discord in the description below or comment down below. And if you find this content helpful, please leave a like and subscribe. Thanks everyone. Talk to you later.